So my goal is to hit $73,000 in payouts by December 31st of 2026. And you and me are going to plan how we're going to do this together. If you don't know who I am, my name is Shangab. I've been trading futures for about 2 years now, and in general, overall, about 4. However, I've yet to get my first ever payout or make any money from trading in general. So this year, I'm looking to change that by going from $0 in payouts to $73,000 in payouts. Now, I've said this a few times in my past videos, but I never really broke down how exactly I'm going about it. So this is what we're going to do in this video. Of course, we're going to get the trivial stuff out the way, but together we're going to go ahead and go into the goal breakdown, what we would need in order to accomplish our goal, how much expenses we may have to incur overall. I hope I said that word right. And the daily inputs / habits / actions that would best help our EV as a little bonus. If you don't know what EV is, it's just expected value. And today you get to be accompanied by my drawing skills, which is A1. So you're welcome. I think we should start with the trivial stuff. So the trivial stuff is always what people want to know, like what prop firm and, what prop firm you're planning to use and whatnot. I don't really think any of that matters. You could use whatever prop firm you want. However, I will say probably best that you find one that best suits your trading style. So, of course, as far as prop firms, I am going with Apex. I'm not going to go over trading style. That's all, depending on you. So, you do whatever the hell you want on that department. So let's first get into the goal. So the goal is $73,000 in payouts. Now, $73,000 is a big number. If you don't know why yet, the reason why I want to go with $73,000 is because that would be about 24% more than what I make at my current job last year. So we have a meaningful goal of $73,000. Now, in order to really get an idea of $73,000, we really have to break it down. And there's like 3 main ways that I want to break it down. So I want to break it down quarterly, very ugly. I want to break it down monthly, weekly, and then if we have a little bit of space, daily. Excuse my ugly ass handwriting. So I think that is important we break our goals down into these 3 or 4 parts so you know exactly like if you're on par or not. The main reason why is because a big goal like going from $0,000, wow. Going from 0 to 73,000 seems like a lot, especially for someone who hasn't even touched a payout yet. So breaking it down really helps make it seem a lot more achievable and gives you a lot more ideas on like exactly what you need to do. So let's pull out our handy dandy calculator because my math isn't the best, right? So if we want to make $73,000 or whatever your goal is, if it's 250,000, 100,000, whatever it may be, you first need to split it up. So just start off with the number. So we'll start off with $73,000 in my case, and then we'll look at it quarterly. So we have about 3 quarters left into the year. So we'll just do 3. So knowing that we need to make $24,000 and let's say $400 a quarter. So $24,400 a quarter is what we need to make on average. So now if we could break that into monthly, right? What does that look like monthly? So it's very simple. There's 3 months in a quarter. So you just divide that by 3. So that gives you $8,000, $8,111 per month you need to make in order to reach the quarterly amount. So here's where this gets a little neat, right? We need to look at exactly what we need to make weekly. So weekly, we need to make there's 4 weeks in a month. So we'll divide that by 4. On hand, we would need to make $2,700 or $2,027 a week. Now this is where prop firms come into very handy, right? Because if we're looking at it as a single 50K account, you need to make $2,000 a week. You're asking for almost a payout every single week. However, the more vehicles you have, let's say for example, 4. And when I mean vehicles in this point, I'm talking about like funded accounts, right? With funded accounts, if you split it up, right, you don't necessarily need to shoot for $2,000 a week. I think it's best if I copy trade 4 of them and I do this amount divided by 4, I would get $506, which means honestly, so long as I have 4 Apex evals that I'm copy trading, my weekly amount really only needs to be $506, so 506. Now here's the tricky thing, right? The math is simple. We only really need $101 every single day. However, you don't win every single trading day. So this is where like you can come into as far as like discretion. However, for me, I don't really set my daily take profit off of this. I would more set it towards the fact that I'm aiming for $506 on the week. 500 up, 500 down, that's kind of what I'm aiming for the week. So given the fact, you can manage your risk accordingly. But for me, I'm gonna probably want to stop when I hit 506. So every single day I might have a daily loss and take profit limit of $200 or $300. Depends on how much I'm risking. So now that we know, we kind of broke down a goal, right? It's no longer $73,000. It's really just only $500 a week on 4 accounts. We now know how many funded accounts we need to shoot for. We're gonna need to shoot for 4 active, copy traded funded accounts. So our goal is to have 4 accounts funded always in cycle and always be on 4 funded accounts at once, copy trading them, aiming for about $500 a week to get about $2,000 a month. And that $2,000 on each will total up to $8,100 and whatever change left, putting you at, if you average $8,000 a month in payouts, it puts you at $2,400 on a quarter, $73,000 at the end of the year. This is how we kind of split it up. Of course, the numbers are going to look different for you based off of your monetary goal amount, but it makes it a lot more, achievable. Now, if you have a bigger number, say something as like 250K, right? Let's say we did this with something as 250K. So let's pull out the calculator and we say, okay, cool. 250K is what we want to have in payouts by the end of the year. So 250K, we have 3 quarters left. That leaves us with $83,000 that we need to make each quarter. So $83,000 each quarter has 3 months. So we can divide that by 3. That makes us $27,000 every single month we need to withdraw. All right, so if we know we need to withdraw 27, let's just say $28,000 every month. We're just gonna divide that by the amount of weeks in a month, and that gives you $6,000 to $7,000 a week you need to make in profit. Now, if you need to make $6,000 to $7,000 a week and you want to break this down, I don't advise you to do it on 1 account. What you may need to do is you may need to divide this into 5 accounts, and then your overall weekly profit target that you're looking for is just $1,300. So your weekly profit target is $1,300, weekly loss probably $1,300 as well too. You probably would be risking somewhere in the 2 micros. Now, of course, let's say we go back to this 6944, right? And let's say we divided it by 10. So then that weekly amount only goes down to you just shooting for $694. It's a lot more like achievable if you look at it this way, because like you're just focused on 1 account. You know that you're copy trading 10 of them, but your main goal is just $694 per account. So now we need to talk about the expenses, because the expenses is very important. So like for me, I'm going to talk about my strategy when going into this whole thing, right? I know that Apex, for the most part, have been running 90% promotions quite frequently. So they've been running 90% promotions quite frequently. And with that being said, these 90% promotions allows you to really get a funded account for $19, or not funded account, sorry, an eval for $19.70. Now let's say that the activation fee is around $75, okay? So how are we going to kind of determine how much we're going to allocate towards prop firms every single month? Well, it matters. There's a few things we need to look at. One, we need to look at eval expenses, which is right here. And then we need to look at activation fees. But then we need to look at a key performance metric, or a key performance indicator, or KPI, if you want to so-called say. And that is, what is your pass rate? So pass rate is kind of something similar to like win rate, of course, but this just basically means out of 10 challenges or 10 evals, how much are you passing? As you know, currently my last pass rate was 12%. I'm going to say hopeful that I'm going to be able to bump it up to at least 20 to 25, which means that at every 4 evals that I take, 1 of them I will pass. Now, this is going to be also kind of tricky on the funded side too, because if that transfers over to funded, that means that every 4 funded accounts you have, 1 of them are going to get to a payout. So in all, you kind of blow 4 evals just to get 1 funded account, and then you have to blow 4 funded accounts just to get 1 payout. So let's look at the math on that, right? So let's say 4 evals, which means that our funded ratio, our cost to get funded, our cost to funded would be this times 4. So we can figure that out. We have a 20% pass rate, 1970 times 4 equals $78. So if every 80 bucks we spend, we get 1 funded account, then our cost to pay out, so CTP, let's say we keep the same ratio at 1 to 4, so every 25%, it would then mean this amount, so 75 times 4. So $300 to get your first payout. Now, if we hit the maximum amount of 2,000, which this isn't telling, right? Because in order to pass an eval or a 50K eval, you have to hit the buffer. So we're gonna assume that you can also hit that same buffer on a prop firm funded account, so long as you don't, fuck yourself up mentally here. That means all in, we'd have to spend 300 plus 780, which would equal $378.80 to get a payout. Now, with that being said, if that's the case, then depending on the payout amount, if it's $2,000, then we know we ended up, if we play the game right, with a net profit of $1,621. But that's not the point here. We need to look at this. So cost to funded is $78. So now let's say we start to buy it in batches. So if we buy them in batches, then that means, because we're gonna wanna have 4 funded accounts, we just have to multiply this number by 4. So it gets a lot more expensive now, right? It gets a lot more expensive. So it becomes 1,200 on this end, and it becomes 315. And when I mean 4, I mean like if we come up here, we understand that we're gonna need 4 active funded accounts. So the cost to be able to get 4 active funded accounts to a payout is roughly going to cost us about, I would wanna say, I think it's, it looks about right. So $1,515.20. Now, is it worth it? Well, let's say the minimum we get is $2,000 from them, or that'll be the maximum payout. We'd have $8,000 in payout. So $8,000 minus 15, 20 equals a net profit of, sorry, let me probably erase this. A net profit of $6,484.80. So now we understand we're playing a profitable game, so long as we get our pass rate up to 25%. So now, what is our monthly allocation then? I'm glad you asked. Are you willing to allocate $1,500 a month to prop firm? I know me, I'm not willing to allocate that much, because 15,000, and there's 9 months left. I'm not the best at math here, but 1,500, 13,500, which is way over my buffer limit. So what shall we ever do, Omar? Well, I can start out by saying I'm not going to allocate 1,500. This is where you kind of take into mind like how you want to play this game, right? And I think I covered up that whole thing with my calculator. I apologize. But if we kind of look at it like this, right? It depends on like how much you want to allocate, right? But I would say for me, I'm not comfortable allocating this amount right here. That's not something I'm willing to do. So probably I would need to be at around 500. I'm okay with allocating $500 a month to prop firms. Where ambiguity comes in, right? Or I hope I said that word right, doesn't matter. Where ambiguity comes in is basically right here with like the amount of cost to like get an account like funded or an activation fee. If you can get this waived, or not waived, sorry, if you can get this down, you can like kind of target discounts that gets this down. That also kind of helps, right? But looking at it like this is about roughly the prop firm math and what it will take in order to get to my goals. It probably would take me spending almost $13,000, $500 to get to my goal of $73,000. So my goal is to do this in almost half. So I'm willing to allocate $500 in prop firms. And hopefully my main thing that I'm gonna have to bump up is that pass rate. I'm gonna have to get that pass rate somewhere around 40%. So 40% will be a lot more feasible, especially for this type of plan. So we know how much how much at the end of the year prop firms may cost us. And we also know how much we need to allocate per month. I think the last step is kind of a little bit of a bonus. We'll just kind of talk about like the daily inputs or like habits that in theory should help you boost EV. Now, I'm not gonna lie to you, I did code up a little bit of an agentic workflow and have them kind of research and scour the net for me. And we kind of came up with this overall thesis that I wanna kind of go over with you guys on like theoretical things that could help you as a discretionary retail trader kind of bump up your EV. So the key thing, right, is like what habits or actions theoretically boost the expected value of a discretionary trader. So at 10 ages, just kind of scour with different like principles and different thinking. And this is what we have came up with. The first one, the one that all traders, or I'm sorry, I said traders, all of the agents had come to an agreement on was that trade selectivity is going to be the biggest. So selecting your trades and basically, finding the good trades and eliminating the bad. And this was one of the things that in my previous video, I don't know if you had a chance to watch it yet. If you didn't, go watch it. We talked about mainly like trade selectivity with the cooldown window that I had was a big game changer for me. And that is supported here as well too. Trade selectivity is really a big thing that you need to look for because over trading is the best way to kill your expected value as fast as humanly possible. Some other things, I mean, of course, pre-trade written thesis is just basically saying like, write out what you're looking for before you enter the trade, like have that already planned out. But I'm pretty sure a majority of you guys know this. I kind of want to target the stuff that like really I found quite insightful. Of course, journaling your trades and reviewing it after is another key habit that actually will help you boost that expected value. Fixed fractional positioning, of course, just risking a set amount per trade. But there's actually something that kind of, I would want to say conflicts this as you get better as a trader, and we'll talk about that a little bit later. And then these are some of the things that are agreed on, like minimum risk to reward ratio. I don't really think that matters as much. Prove me wrong in the comment section below, feel free. Daily loss limits, very helpful if you're emotional or, I didn't mean like that, I'm sorry. Very helpful if you tend to let your emotions get in the way of your trading. Having a daily loss limit is actually probably one of the best things you can do to help you out with that. Cost management didn't really matter as much. Sleep and exercise and cognitive recovery protocols were actually something on the list that actually helps you boost EV. So this is something that I found quite interesting. The outliers is where the good stuff are, right? So asymmetric sizing based by conviction. This is really neat. And this is only if you're an advanced trader, right? So this is what was conflicting the risk management style a little bit earlier. Basically, you've heard it before. Give more risk to your A+ setups than your C+ setups. That's basically what this is talking about here. But your A+ setups, usually when people say it's by data. As a discretionary trader, you understand one underlying principle. Shit in market changes frequently. You understand that there's different market conditions that supports different setups and doesn't support some of your go-to setups. So you have to understand that markets is going to change, and it takes your ability to recognize what type of day it's going to be from the moment you get to the charts that can really help you navigate this landmine field. So what I kind of found and how I kind of took it as not necessarily more by data is where you're using your sizing, but by conviction. The thing is, this is a double-edged sword. Because if you don't have conviction, if you don't have experience, if you don't have intuition yet, this so-called conviction that you're using, this intuition, is illusion. It's not there. So it's a double-edged sword. However, it is something to kind of take a look at. However, this deliberately this right here is the reason why you don't take AI at face value. All right. This right here, right? Scaled entries to improve average price under uncertainty. So when you're not sure about a position or you're not sure about an entry, scale into it. This was something that I actually found kind of interesting. But like my fix for when I'm not sure about something is I just don't take it. Execution only mode during live trades. So what does this mean? Essentially, when you take a trade and you're entered into it, you establish a hard rule that no fundamental or narrative information is processed. What does that mean? Your decisions are just strictly made by price action driven alone. So this is something that I had kind of experimented with a while back ago. I would say it was very helpful for me in the fact of like I had so-called fold'em zones. I talked about this like maybe like a year, 2 years ago when I was first breaking into futures. Fold'em zones is essentially areas where like they're invalidation points. Where like, of course, before you get into the trade, you know where your stop loss is, you know where you take profit. But as you're in the trade and the trade is developed, you start to notice these areas where like, okay, cool. If we kind of come and target here and kind of flush through here, the likelihood of us hitting my take profit before our stop loss is very low. So this right here is an area where I can cut my loss short and get out the trade. This is what I call fold'em zone. This is basically like around the same thing, like you kind of viewing price action to determine your next actions in your trades. And it really did help me cut my losers a lot quicker. It didn't help me as much though with my winners. My winners, I had to really just kind of take my hands off of it. And that's where like partials came into play and trailing the stop loss to break even. These things came into play because they allowed me to really like let my winners like run. So now I'm at the point where like I'm either getting out of a trade because like I get stopped out at break even or I get knocked out at take profit. So another here's a neat little like trader profile that we kind of break down, right? So if you're a beginner, right, focused on like one fixed sizing, right? Focus on writing out your trades before you enter them. have a daily loss limit, and then journal, right? But as you start to advance, right, you can, get rid of the bottom 30% of your trades that you notice from your journal. You can tighten your selectivity and you become better at trade selectivity. And then this is where like replaying your trades, whether it's like back testing or like not necessarily forward testing, but reviewing the film is very, very, very helpful. If you struggle from over trading, just set up a checklist with like no trade rule. Basically, like if I exceed this amount, I should not take a trade. Focus on reducing trade frequency and like the biggest thing that like helped me with like over trading is looking at how much commissions cost me. That was really helpful. I realized I was losing a lot of money. Emotional trader, of course, daily loss limit, right? Screen off, get some sleep. That's actually, I'm gonna talk a little bit about this and I promise I'm not gonna talk too much. I know I'm dumping a lot of stuff here, but mentally, if you're emotional in your trading, it's tied to something mentally outside of trading. So it's somewhere in your life where like you're very angry at something or something like that, and it's kind of like spilling over into your trading performance. Now, I know like a lot of people like, oh my God, I hear this shit so many times, but really take a time to kind of look at like what trading behaviors you're doing constantly that's costing you money, bad behaviors, and then really try and figure out like what is the trigger behind this. And then once you identify the trigger behind it, try and tie it back to something else in your life that happens to you frequently that you feel quite angry with. Last but not least, this is what I'll be doing as I'm not experienced, but however, I am looking to optimize my edge. I am gonna kind of dabble into like conviction sizing. So basically like, okay, if I feel like this setup is of higher quality, I might go up to 2 mini contracts instead of 3, or 3 mini contracts instead of 2. And then also, like I just trade NQ. However, one of the biggest things is like kind of looking to scale in positions I'm unsure of. I could take a look into that, but honestly, I'm really satisfied with like my whole idea. Like if I'm not 100% sure on it, I'm just not gonna take it. That was something that always bothered me about like A+ setups, like the whole A+, B+, and C+ setup theory, or like concept. Like if you know this is a B+ setup and this is a C+ setup and you're like minimizing risk, how about you just don't trade the setup and then you just wait for your A+ setups? All right, so now we have a goal. We have some inputs that we can help, or we have some inputs that we can plug and play into our system to hopefully help us get some more payouts. And we have a logical way of breaking this down to know what we need to target for. I hope you guys enjoyed this video. This was a little bit of a longer and far more boring style of video, but I feel like all my videos are pretty boring. But my goal isn't to make entertainment quality. My goal is to make valuable quality. So I kind of judge my videos on how much value I'm giving versus how entertaining I am. But you know my motto, it's the end of the video. We're on like 38 minutes of recording right now. So be a problem solver and see you guys next time until the last time. I'm sorry, I'm really tired today. I don't have any special outro. So I'll see you guys in the next video, which I'm going to